One of the companies that's going to be most impacted by tariffs, at least immediately, is going to be General Motors. The company is already saying that they're going to have a $4 to $5 billion impact from tariffs, but you can see that the stock is actually holding up pretty well. Stock is up 2% over the past year. They continue to buy back stock. They've actually put some of that on hold. I'll get to some of that in just a second, but I think this was one of the most interesting earnings reports from the first quarter because this is a really big purchase. This is going to be one of the things that customers are potentially going to buy a little bit earlier before tariffs. Maybe that pulled some sales into March. Are they going to start slowing down those purchases as people get a little bit more worried about the economy in April, May, June, especially with interest rates not really coming down? Let's dig into what we learned from General Motors. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. I just want to start with this because General Motors, a market cap of just $44 billion. So I think that's always important context to start with when you look at how big and profitable this company is. I want to start here with Mary Barra's letter to shareholders. A couple of things that are worth highlighting. The first is this $4 to $5 billion impact from tariffs that they have. They said that they're updating their full year EBIT adjusted guidance to a range of 10 to $12.5 billion. That's including that impact. So that's a big impact, but keep in mind that they're still going to have positive EBIT adjusted and still be at a pretty good valuation with that $44 billion market cap. Now, one of the things that they talked about a lot on the conference call is this $4 to $5 billion impact is going to be this year. We don't know what the impact is going to be next year. They're going to move some of their production to the US from other countries. They're going to try to finalize it. You know, all these tariff things are moving so quickly. So hopefully we get some final answers on what they can and can't import from certain countries. And so they'll be able to move their production around. But there is going to be short-term impacts, and some of those will be abated over the longer term. We also don't know what sort of pricing impact is going to be. As tariffs hit every single company in the industry, those costs are going to go up for every single company. So is everybody going to be able to raise their prices just a little bit? It seems like GM is maybe in a little bit better position than a lot of their competitors because they're gaining market share. They're actually holding up pretty well on prices. In the EV market, they're now the number 2 player, and they had pretty solid margins of 8.8% on a gross margin basis in the first quarter. And really the core of General Motors is these big trucks and SUVs. This is the Chevy Tahoe that you see here, 69% market share among these big SUVs. That's just a massive, massive number. I know that's something that I see a lot where I live, but Chevy Traverse sales are up 62%, Acadia 73%, Enclave 37%. So the SUV market is really the core for General Motors, and that continues to do extremely well. But EVs growing like crazy, up 94%. This is something where I don't think we're going to see that growth rate in 2025. But they now have a 10.4% US market share. They're going to be able to offset some of the credits that they previously had to buy. So it's going to be a savings that they're going to have for the business overall. And this just kind of reduces their long-term risks. If they're going to be able to make popular electric vehicles, maybe this isn't a company that should be trading for 4 or 5 times earnings. It should be a little bit higher multiple. Super Cruise continues to move forward. I think this is one we need to really wait and see what they're going to do. They fully acquired Cruise, their former autonomous driving company that they were funding. That was kind of a almost wholly owned subsidiary. I think they owned about 80% of that company, but they shut down the robotaxi business that they were going to build with Cruise, and they pulled that in-house, thinking that they're going to sell fully autonomous vehicles up to level 4 autonomous vehicles in the future through this Super Cruise kind of product. That's going to be incremental subscription margin, not a ton of margin, but it gets a little bit of margin coming into General Motors. But let's take a wait and see approach on that, because I think there's a lot that we need to learn about what that business is ultimately going to look like. And then here's ultimately the guidance for the full year: earnings per share diluted adjusted $8.25 to $10 per share. Again, General Motors stock's still pretty cheap, even after that huge tariff impact. Their China joint venture was a bit of a bright spot. That's starting to improve just a little bit. That equity income is now at least very small positive numbers. It's not quite the negative that it was over most of the past year, and their wholesale numbers starting to improve a little bit. Had a pretty good fourth quarter, but they were pretty depressed ahead of that. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. In GM Financial, this is where we're going to want to watch what is the risk on the balance sheet. What is the risk for GM Financial? this isn't going to affect their auto business directly, at least, but it's going to tell us how much are people taking out in loans? What sort of risks are there for default on those loans? Because if return on tangible equity, which is what they show here in this percentage point, if that continues to slide, that's telling you that those loans aren't performing quite as well as they once were. They're not able to get the interest rate that they need to have a little bit higher returns. And you can see that they're already starting to pull back. The percent of GM Financial as a percent of US retail sales, that's down from 40% a year ago to a little over 36% right now. So they're saying, you know what? We maybe don't want to take all of that risk on their balance sheet if the economy does start to turn south. But this business is, just kind of a steady performer. They did pay $350 million in dividends to General Motors in the quarter. The other piece of the balance sheet that you always want to look at with GM, this is the auto side of the business. A lot of investors always conflate the GM financial business and the GM auto business. There's really two separate businesses, two separate risk buckets. The auto business has $18.9 billion worth of cash as of the end of the first quarter, $15.6 billion worth of debt. So net cash position in the auto business. Now they have to have a lot of cash on the balance sheet to just simply run the business on a day-to-day basis. So it's not like they're going to be able to just pay off their debt with the cash that's currently on the balance sheet, but the balance sheet actually looks pretty good for the auto business. They also did do a $2 billion accelerated share repurchase program. They're going to pause their share repurchase program now, starting in the second quarter. I think they're just going to look for some more certainty with what's going to go on with the economy and tariffs. But that share repurchase program is going to continue. Basically, the banks have the money to be able to do those share repurchases, and it's going to take them a little bit while to flow that through the system and actually repurchase those shares. So look, you add all these things up, and I think GM is still sitting in a pretty good position. They've got a pretty good balance sheet. They obviously have very popular vehicles, but they are going to be impacted by tariffs. And the bigger thing to watch with GM and really with all automakers right now is what's going to happen with the economy. Do people stop spending money on new vehicles? Are they a little bit more hesitant to buy a $60,000, $70,000, $80,000 SUV if they're worried about their job next month or even next year? The impact of tariffs is going to take a while to flow through the system. And we're starting to get some of the numbers of what companies are expecting, big numbers coming from GM, and they're going to have to eat a lot of those losses. But they are going to start moving some of that production back to the US. They said about 30% of those tariffs are going to be able to be offset by some of their actions that they can take internally. But the next question is, what happens with those tariffs long term, and are they able to raise prices to get margins back to where they once were? If the economy is not strong, they're not going to be able to do that. So let's see what happens when t-shirts potentially go up in price by 150%, when it's more expensive to buy socks, when groceries are more expensive. Does that start to impact consumer spending and ultimately make its way to GM's income statement and financials? We haven't seen a whole lot of that yet, but they're giving us an idea of what they think the short-term impact is going to be. And the big thing that I took away from the conference call is they're not going to be buying back shares super aggressively because they want to be conservative with the cash they have on the balance sheet in case things get worse. So a lot to take away. This is a stock that I sold late last year when they got out of the cruise business. Just didn't fit in the asymmetric portfolio, but I do still think it's a good long-term value and it's a very well-run company in 2025, but potentially a lot of headwinds ahead. So let me know what you think about the state of the US auto business and GM specifically. Leave those comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next.